Our next presentation is a panel discussion on the technology fueling the growth of Latin American markets. In particular, the panel will discuss the MILA, the name given to the integration of the stock exchange markets of Chile, Colombia, and Peru. MILA celebrated its second anniversary last month and has created a securities market with more than 600 listed security companies. The panel is moderated by John Rupert, President and Chief Executive Officer of Tellefsen and Company, a management consulting firm that provides counseling and professional services to the financial services industry. With more than 25 years of experience in the global financial industry, he has a broad international background in front and back office environments of investment management firms, security broker-dealers, investment banks, future commission management merchants, information vendors, equity, options, and futures exchanges. John also did give us a fun fact. John was enamored with technology at an early age and liked to tinker. At the age of 15, he went to an open house tour of the MIT labs in Cambridge, Massachusetts, and crashed the cyclotron. It's a particular particle accelerating atom smasher, probably costing tens of millions of dollars, and one of the few in the East Coast. John basically accessed the terminal in the lab, crashed the program that a grad student was running. So, needless to say, the grad student was not very happy. With that, I'd like to invite John to the podium.
Having consulted for years, my recent career, I get paid to break things these days. We've got an interesting panel today on the MILA initiative in Latin America. There are a number of exchange alliances that have come about the last 5 to 10 years, and is an exciting alliance going on in Latin America that our panelists will discuss today. So I'd like to invite up Jitendra Puri. He's the Chief Information Officer from the Colombian Securities Exchange. Araya Falcone, who's the CIO from Bolsa, Comercio de Santiago. And Luis Carballo from the BMV, the Mexican Stock Exchange. So Jitendra, MILA has been around several years. The concept was created, I think, about 4 or 5 years ago, actually 6 or 7 years ago. Can you give us some background on the evolution of the idea, the concept, and where things are today?
You're right. The whole concept started by Peru, Chile, and Colombia. And the reason being that if you look at these markets individually, they are very, very small markets compared to other bigger markets in Latin America, such as Brazil and in Mexico. So, besides having the inspiration to grow, there was no chance that being on their own, they would ever get attention from the international investment community. So they kind of joined together and create one trading block, if you will, so that they have some critical mass and a marketing brand, so that international investors take some interest. So that was one reason, and the other reason was that the issuers in these emerging markets, when they look for funding, they go for bigger and larger markets, such as US, Europe, or elsewhere. And we wanted to create a market where the issuers didn't have to look elsewhere, and they could generate enough demand within. And another factor was that on the broker community, they were looking for more products. So if you look at the portfolio of instruments that are traded in MILA across Peru, Chile, and Colombia, they kind of complement each other, because in Chile there are more services, Peru provides more mining products, and Colombia provides more petroleum products. So it's kind of a very diversified portfolio, which is very attractive. So these are kind of the motivating factors which conceived MILA. But basically, it's a concept, and it's much more than just order routing network.
Good, good. So I can imagine there were many challenges when this concept began to gel and come into place. What were your experiences in terms of there's technology, there's the legislation, legal contracts, potential taxation issues? What were the challenges in your respective countries? Were there some common issues or were there some unique ones?
Well, as U.S. Commissioner said today in the morning, usually regulators are slow and bureaucratic sometimes. Obviously, in our country, it's the same thing. So we took a big decision around to start MILA, and we decided to start with local regulation and local rules of each country, because we can wait for change everything and harmonize the rules and least taxation in the three countries. So today, in the integration between Peru, Colombia, and Chile, you trade in local rules in each country, okay? And the order routing integrate and facilitate the broker integration between them. But sometimes you need a lucky strike. And the lucky strike for MILA integration is that 4 countries sign an alliance that's called Pacific Alliance. That means Peru, the government of Peru, Chile, Colombia, and Mexico is integrated in one block for the Pacific. It signed it in last June 2012. So they want to integrate, facilitate the order flow, the flows of capital, the integration between the exchange assets, etc. So MILA will be benefit with this integration in the future, and we want to take advantage of it.
Interesting. What kind of operational challenges have there been in coming to market between getting the brokers lined up who would be interested and potentially, connecting them and testing? What's been some of the operational challenges, gentlemen?
So, to avoid some of these operational challenges, rather than having operational challenges, we, right from the beginning, conceived a model where we wanted minimum or no impact for the local brokers. So, when they trade locally, they are familiar with how they trade, and all the post-trade process we have maintained is absolutely transparent for them. But that meant absorbing all those impacts internally between the exchanges and the CSDs. So we created a process whereby we could clearly settle between all these market infrastructure providers across the 3 markets with having no impact for the local trader. So I would say that there was no operational challenge for the broker community as such, because they didn't have to do anything. However, that being said, we also took a decision to keep the project a little bit under control, that we wanted to trade in multi-currency. That is, that stock would be traded in the currency where it's listed. And that actually meant for the traders, because it's all settled T+3, so that meant for the traders to have another operation, which is a Forex operation, to not have the exposure on the Forex movement. Anders, would you like to add anything?
Yeah, multi-currency, as Jitendra said, is a big challenge in terms of operational and liquidation of this whole operation. Imply that the brokers has to implement effects to make the liquidity of the operation. And other challenges for our brokerage houses, because they have to implement in their back office system new operational new features register and billing the operations that are occurring in the system. And in the Santiago Stock Exchange case, we provide for brokerage houses back office services. It's a big income sources for the stock exchange, and we provide the facility to custody, billing the transactions in the system.
Luis, what's the expectation with order routing between a Mexican Casa de Bolsa and, let's say, in Colombia? Is the routing done from the Mexican broker through the exchange to the Colombian exchange, or is it broker to broker? What's the mechanics of the order routing?
So currently Mexico is not part of MILA because of their regulatory issues. We're not allowed to trade issues that are not listed in our exchange. So currently the only way to do it is from brokerage to brokerage and then to be foreign exchange. Although the idea of MILA is to do it from exchange to exchange, currently that's not allowed. And that would bring in some other kind of issues, like we need to integrate our current systems and have the same interfaces as we all have fixed 4.4, but we need to take into account that every country has a different kind of tags or different kind of meanings for different tags. And then comes market data. Market data is different in every country. Every member needs different kind of information to be distributed in market data. So whenever we get integrated into MILA, that's going to be an issue that we need to attack and make sure that we have a common market data for all the countries on all the systems.
So, Andres, this initiative lends itself to standardization where possible, market data, connectivity, clearing, symbology, things like that?
Yeah, of course. When MILA started, the first idea in 2010, in the case of the Santiago Stock Exchange, we just launched in March our new trading system using fixed 4.4. So when the MILA idea started and finally went launch in May 2011, we put our fixed 4.4 specification on the table, and we harmonized the specification of fixed for the three countries. So Peru and Colombia has to build their own fixed gateway by their own or using third party, etc. And now the next challenge for the incorporation of Mexico is agree all that specification that is centralized, organized by the three countries. So it's a big challenge. And another challenge in the introduction of Mexico, obviously, Mexico has another volume of market data, and could be a big impact for the three countries receive and manage all that market data.
So my question today with Chile and Colombia, are local brokers routing through the exchange's gateway to the other country, or direct?
Through the exchanges.
Okay.
So if the local broker wants to buy, let's say in Colombia, wants to trade an equity which is traded in Chile, the local broker doesn't have to do anything to have a connection with Chile. They have a connection, existing connection with the local exchange, which is the Colombian Securities Exchange, and they route the orders through the Colombian Securities Exchange. And exchanges between themselves have created a network whereby they can route orders between themselves. So orders, when they hit the exchange, they are either meant for Colombia, if the broker is Colombian, or they could be meant for Peru and Chile. So depending upon where the order is supposed to go, the exchange routes the order.
Okay.
So it's kind of a smart order routing logic which is built at the gateways in every exchange.
Good.
Yeah, excuse me, I want to add something. And in the case of the Latin American exchange, we usually provide workstations to the brokerage houses. There are OMS, international OMS that run as well, Fides, Assigner, etc. But the three exchanges in Mexico as well build their own workstations. So we facilitate the order entry to the brokerage houses and incorporate market data and order routing directly using workstation. And at the same time, we have DMA, direct market access, for brokerage houses that use international vendors, or who are develop their own order routing system. And in the case of Chile, we are allowed allocation too for brokerage houses. So there are many sources that we implement to send orders through this infrastructure.
Are you finding that the interest in cross-border trading is more institutional clients, retail, or both?
And in the case of Chile today, it's institutional mostly. But brokerage houses in Chile allowed retail access directly to the market. And in the case of Chile, approximately 12% today represent retail orders that go in directly to the merchant engine. And if it depends on the brokerage houses that they allow to buy and sell orders to the other countries.
So MILA today, is it mainly equities, fixed income? What other products might be traded through this mechanism in the future?
It's only equity in the first place, and the vision is that as it takes off over time, and it goes to harmonize, it will absorb also other markets.
Okay, good. So, what's been the single biggest challenge to get a new exchange on board? Has it been all the regulation and legislation? Is that the single biggest barrier to entry today?
Currently, yes. To have Mexico into MILA, the current challenge is a regulatory challenge. And the idea is to have a unified market, and that's what's not allowed currently in Mexico. So we need to open up regulatory issues and enable for us to become part of MILA. We have the Pacific Alliance. It's not really the same. We want to incorporate it and have our members and institutional investors and everybody route orders through our exchange, so we could list any kind of stock from equities from the rest of the countries into our book and have everybody buy and sell direct from it. But currently, it's not allowed.
I was just going to complain. The other challenge, which currently exists in MILA, and that will only increase as we incorporate Mexico and maybe further down Brazil, is that when you incorporate a new market, you are providing to the market as a whole new products and services, and with that also comes the challenge of providing market information, market research. And so that's one of the ongoing challenges, how investors in Chile can have information about the equities which is traded in Colombia, for instance. And unless they have that information, they're not going to venture out and put the money. So that's an ongoing challenge. And market research within Latin America as such is not something very evolved. And that's something that we have to improve.
So in one of the prior sessions, Bob Caisley was talking about the role of exchanges and the evolution of exchanges. Clearly the opportunity to provide this and research and other things as new businesses, as new revenue streams has got to be exciting to all of you.
Well, every new thing that you can do, you could see that as a revenue opportunity, but I don't know if exchanges are going to venture into that, because that's something much more a broker kind of activity, and but something that we haven't looked into as a business venture ourselves.
Okay. So has MILA attracted more liquidity to these markets? Have you seen more liquidity as a result of as they kicked in?
MILA is established principally for issues being listed in all local markets. We have a phrase that says being a MILA issuer listed merely in the three markets. So in the case of Chile, for example, retail industry expanded through Latin America, Brazil, Colombia, Peru extensively, the same as financial sector. So for them, attract order flows and from money from other countries very useful. So we are seeing increasing a lot of business with this integration, so impact on the flow definitely. More than 7 MILA funds are created in this period of time, in just 2 years. So that increased to the capital flow in the 3 countries.
Interesting. Is it a coincidence that today is MILA Day in New York?
We were supposed to be there actually, and we had to cancel our stuff there so that we could be here.
And I guess what they're doing in New York is presenting more of the opportunities to probably predominant institutional investors.
That's right.
So this is an interesting alliance. There are many other exchange alliances in the world, whether it's across the Atlantic, U.S. to Europe, or European or Central European exchanges, or in Asia. This is one of the first ones in Latin America, Central and South America that has taken off like this. And I think the overshadowing partnership that the countries are trying to do, this is the one of the foundation pieces to drive that. What kind of feedback have you gotten from certainly the government and regulators and investors? Can you share anything on that in your respective countries?
From Colombian perspective, what we're seeing is that we're seeing a lot of M&A activity within across the region. For example, Brazilian institutions such as BTG, Pactual, they have acquired brokers in Colombia, in Chile, and they created kind of pan-MILA service, if you will, across the market. And that's bringing new technologies that Colombia didn't have. They have alliances with vendors such as Fidesa and SunGuard, and that technology kind of adoption is taking place that local brokers were not used to, and that will create pressure for all the other brokers who are on their own, if you will, and that will kind of drive the technology. And the second thing we're seeing is that cross-border trading, the challenges in the post trade, not in sending the orders across. Even though we try to keep it more simple and so there's no impact. Usually foreign investors don't just give the money to unknown or newly known partner in the destination country, their money. So we're seeing that the feedback we've received is that they need the custodian role, which is very common across the developed markets, but in Latin America that needs to kind of filtrate more so that markets actually work according to the international standards and not local rules.
Yeah, in the case of Chile, we are seeing more than 43 agreements signed between brokerage houses and the 3 countries to facilitate the order flow. And as you mentioned, today we are celebrating in New York the first MILA Day. And participants for the government of the 3 countries are invited. The regulators are invited, and they are have a good commitment with this integration, this MILA project, because their boss signed an agreement related to the Pacific Alliance, so they are very good aligned with this integration.
Good. Do you find, what are you seeing and hearing in terms of the local brokers? Is it the larger ones, the ones that are more either aggressive or technologically advanced that are more excited about this? What's the makeup that you're seeing locally in respective countries?
In the case of Chile, big brokers are participating in this integration. The biggest one is an institutional broker, not from the banking sector, open branch in Peru and Colombia to deep their participation in this market.
Are you finding that the brokers are beating up on the exchanges to help make this happen, or vice versa?
Excuse me?
Are you finding that the brokers are pushing the exchanges to make this happen, or is it the opposite, or both?
Well, it's curious. Yeah. Big brokerage houses usually have the business first than the stock exchange. They already on the other countries and doing business. So this kind of integration standardize the platform and the access to the other brokerage houses. But they compete using services, different services, and they have to open branches in the other countries to better study the assets, etc.
But to complement what Andres is saying, it was exchange-led initiative. But now since it's already there, we expect that there will be pressure from the larger brokers to do more than what we've already done. And the point is important is that the infrastructure is there, but that's not enough. You need more harmonized market and regulation related to the processes and the taxes, but that's something will happen, as Andres said, that because of Pacific Alliance and the pressure and alignment of the regulators in principle. But to change rules is not something easy. But the good thing is that we are on that journey, and we can't, even though the volumes, if you look at 2-year ends since our launch, are not very encouraging. But if you look at this initiative across many years to come, the history will measure us if that was the right journey, but we are convinced that it's the right journey.
I was fortunate to be here last year and got to meet Andres and Jitendra last year, and you were talking about Mexico joining the MILA alliance, and now we are probably months away from turning the key and making that happen, right? Hopefully months.
Yeah, hopefully months. It's what I've learned, at least in Mexico, is the easier it is for our members to trade whatever it is, the faster they will be part of it. So if we are able to make this a very smooth transition for them, then it's going to be much easier for all of our investors to participate in the market.
Good, good. Why don't we open it up to questions? I'm sure you have a few questions out there, but let's just see what the audience has.
Daniel Sumano from Interacciones in Mexico City. I have a question. It looks like a very good idea to have these four markets together or joined, however, but I have a question. If a Mexican wants to buy stock in, let's say, in Chile, what's the currency that I want to use in the Bolsa Mexicana de Valores? Is it going to be peso, dollar? Is it going to be Chilean peso?
So the
what is
idea,
the idea?
The idea is for you to trade in pesos, but it's going to be the exchange rate is going to be adjusted based on whatever rate it is in the other country. So we will be having the translation of the exchange rate from pesos to whatever external rate is.
But there's no liquidity between the two currencies. There's no liquidity, so that means I need to go to the dollar and then to the Chilean peso. That's gonna be expensive.
But you're going to have arbitrage there, right? You're going to
of course. Okay, but the idea is to have listed Chilean companies, or well, all the stocks in all the markets.
Not all the stocks, but yes, but you would see listed stocks from Colombia, Chile, and Peru in your trading terminal. Plus the ones we have already in Mexico.
Okay, then I want to trade in local currency. And, actually, if you buy a Peruvian stock in Colombia,
In soles, yeah.
okay.
Yeah, you trade in soles if you trade from Chile in Peru. We are creating, in the case of Chile, we are created an electronic transaction system that during the execution at the same time when you executed the transactions, in Peru or in Colombia, you could send, if you agree with a bank, for example, that give you a quotation in real time for your transaction, you can send in real time the transaction to their bank, that your as a brokerage house is selected, and immediately trade or close a deal and FX transaction to avoid the problems that you are saying that could occur. It's not running right now, but we are working on it to try to solve the arbitrage problem that could produce the risk that kind of things produce.
Thank you. And how about tax implications? How do you work on that? You have the tax the same taxes in the three countries?
Yeah, we mentioned before that we are not making any change of regulation or taxation issue, and you have to pay taxes in Peru and Colombia and Chile has.
That is the main issue in Mexico, I think, because capital gains in Mexico are tax-free. There are no withholding taxes.
In the case of Colombia and Chile, you not pay taxes for capital gain. In Peru today, you pay 4%, and for dividend, obviously, you have to pay tax. In the case of Chile, 35%. In the case of
There's a cash dividend.
in the case of
Colombian, no tax on
no tax
dividends.
for dividend. Okay, I don't remember in the case of
Yeah,
Peru,
35%.
And the argument is because
Colombia, no tax, and the cash dividends are tax-free.
no,
Thank you.
and the argument is because company has already paid the tax on those profits.
Okay.
It's not like US.
Thank you.
Good question.
You said that one of the reasons why you formed that alliance was to create more critical mass. Have you considered bringing more exchanges from the region on board, and have you invited any, or you just plan to act for the time being as a closed entity?
Not sure if I heard your question, but you're asking if our aim is to include more exchanges as we go. I think that will be a natural path as we go forward after including Mexico. But right now, our roadmap has only Mexico, and the aim is, I think, in 2014.
2014, yes.
Good. Anyone else? Well, we look forward to closely watching your evolution here, especially as you bring Mexico on board. There are some slides we'll probably put up on the website to give you more information on MILA and its evolution. We didn't get into all of those today, so those will be up there. And please join me with thanking our panelists for a great presentation today.